Welcome to Private Equity Profits. Clifford Locks is a certified board of director, a trusted confidant to CEOs, C-level exec, and high-potential employees to help them clarify goals, unlock their potential, and create actionable strategic plans. Seth Green is the nation's foremost authority on growing your portfolio companies with direct response marketing. He is the founder of the direct response marketing firm Market Domination LLC, and he is an 8-time best-selling author who has been interviewed on NBC, CBS, Forbes Inc., CBS Money Watch, and many more. Cliff and Seth interview top players in the financial sector, focusing on private equity firms, venture capital companies, and family offices, discussing developments and trends shaping the industry. These experts will share with you how they've grown their businesses and increased profit, and how you can too. And now, here's your host, Cliff Locks.
Welcome, everybody, to another episode of the Private Equity Profits Podcast. I'm Cliff Locks, your host. Today's guest is Jacob Koenig, the Managing Director and Partner at Woodbridge International. At Woodbridge, their vision is to provide the most efficient M&A models for their clients. That means combining the global thinking with the local action. Jacob is responsible for managing the sales process from bid through closing and serves as a trusted advisor for Woodbridge's clients. Jacob, thanks for being on the show today.
Thanks for having me, Cliff.
It's a privilege. Thanks for joining me. Tell us about your background and how you ended up in mergers and acquisitions.
Look, I was kind of born into it. My father started Woodbridge International in 1993. So I grew up hearing about deals and learning about M&A from an early age. In fact, one of my first jobs as a teenager, I was burning CDs, putting our sim videos together. After college, I started working in the equity brokerage business. I worked at Goldman Sachs in Tokyo for about 9 years before I moved out to Taipei. I worked 3.5 years there running the sales trading business for the Taiwan market. And so coming back to Woodbridge has been great. And I think I've taken a lot of that equity brokerage background, because where we are different than I think the rest of the industry at Woodbridge, we go to a large volume of potential buyers. And so there's a lot of similarity between the block deals that we would put together on the equity side, matching buyers and sellers. You just put yourself in the best possible position when you play the numbers. When you go to the largest possible pool of potential buyers, you're going to be in a position to select the best fit.
That's important. I want to compliment you because you went overseas, after you graduated from the university, and you have that experience. It's a time to grow, learn, mature, manage additional, you turned into an individual that's actually managing teams in an overseas experience. So when you come back, and some of our listeners are very high and ultra high net worth individuals, their ability to look at their children and not just bring them into their company right off after they leave the university, but actually to go out and get some experience and then come back with that knowledge and understanding, it may make that integration piece work very well for the family. So you have a more mature daughter or son coming back to the business. The overseas experience, the Asian market was very, very positive. That's very rich. What are the biggest challenges in M&A, and how do you solve those challenges?
Yeah. Well, look, I think for us, we are focused on the lower middle market. We take on clients of $1 million of EBITDA and higher.
Okay.
Our spot is really the sort of $5 to $35 million EV range. And so for most of our clients are privately owned, entrepreneurial, owned and operated businesses, working through the emotion of selling the company. That, I think, is often our biggest obstacle. Because we go to a large number of potential buyers, we really do get a feel for what the market is saying. And so distilling the market's messaging back to our clients, making them see what the truth is and comfortable with that. That's often the biggest challenge, but it's also some of the work that is most rewarding, getting through that, working through this process with our clients, and again, finding them the best fit for their company. That's what we do.
So some of the challenges, let's talk about valuations and multiples.
Absolutely. Look, I think what was interesting, I was just in Atlanta at the Association for Corporate Growth meeting, and a lot of the private equity firms that I spoke to asked me about multiple compression.
Okay.
And it's interesting because our slice of the market, we didn't see as much multiple expansion in 2021 as a lot of the private equity firms seem to have had. And we actually just did run the data on this internally. We had 32 deals closed last year and 27 the year prior. So it's a fair number of transactions that we're looking across industries. And on average, the multiples in our slice of the market haven't really changed much. In the past 5 years, it's risen slightly. There was a little bit more dispersion in 21. We had higher highs and lower lows, but ultimately there wasn't really too much to read into on that. I think the message is for lower middle market companies, there's a pretty clear way of valuing them. And while that changes across industry over time, the average still remains pretty stable.
I appreciate you sharing that. I mean, about the data side of it, because the sellers don't really understand the data. They'll go online, they'll do some searches, and it's very broad at that point. And you're going to go in, and it's actually the buyers that are going to dictate, the sort of the valuation, and you bring in a large pool of acquiring candidates in place, and then we're creating the bidding environment, and you can maximize value.
And a lot of the times, this data isn't publicly available in any way.
Very good.
It's difficult to find.
Because they're private companies, and other than if you're selling to a public company, even there, it's not totally visible on what that was on the EBITDA basis. Share some of the biggest mistakes people make during the M&A process.
Yeah, again, I think that a lot of the biggest mistakes start off right away in terms of the mindset. And that's why we always run right away once we have a client in the door with what we call management meeting training. And it's a 2-day process. We go through the entire process that we are about to run and get our clients prepared. What are they going to see? What kinds of questions are buyers going to ask? And how can we best position ourselves to maximize value and get as many LOIs in the door as we possibly can, right? So the biggest hurdles that we see most regularly, entrepreneurs who are passionate about their companies, they struggle to pull themselves away. And so being able to demonstrate that the company can still operate without your involvement, that's often the element that we struggle the most in.
So what you're really sharing is, in the private equity, they're very sophisticated, with their portfolio companies, the depth of the bench, meaning how deep is, the middle management, senior management, as, certain founders will have a large, influx of cash coming into them because they're the major shareholders. Will they stay with the organization? Will you have something contractually where they're there for 18 months for that transition? Or are they going to step out immediately and you got to backfill something? Or maybe the company's already prepared somebody. So when you bring something up, extremely important is the idea, if you're thinking about selling in a portfolio company, you really have to prepare the next level of management to be able to step up into those roles, because that integration will go much, much smoother. And at the end of the day, you're going to get a higher valuation, a higher EBITDA on the company with a transaction that has that transition piece all set up, and it can comfortably articulate it. Team Woodbridge is not a typical M&A firm. Explain what sets you apart from other firms.
Yeah, I think one thing that we see a lot in our competitors is a focus on relationship, that these are the pool of buyers that we know, and our special knowledge is going to get you a good deal. What we find is going out to the largest potential number of buyers is what's going to get you the best deal. You're going to find the best fit when you go to that larger pool. So we are very process oriented. We have a special approach where we're really focused on marketing. We're focused on creating that video that we send out with our SIM that gets people excited, and then making sure that when we're in those management meetings, we're presenting things in the best light, the light that a buyer is going to want to hear it. So things like the transition, the methodology that's going to be used for integration, that we have thought ahead about these things, that gets us into a position to get the most for your business.
So the team at Woodbridge is really agnostic on what industries you work in, which puts you ahead of the competitors, because a lot of them are only working in a certain vertical, and they're kind of got some blinders on that this is the vertical we live in. and they think they know all the buyers, but sometimes the buyer outside the industry is looking to bolt something on, and at that point, that adds more value.
Exactly right.
So, when you look at that integration piece, they may want to keep the team completely whole, or they may look at something where the sales team that's existing in the acquiring company, you're adding additional products that are in place. So, that symbiotic type of relationship. So you're cross-selling some of the other PE portfolio companies' products with the acquiring company's products, and it's a good fit. I think that's the magic, the integration piece and the go-to-market. Who's the customer? How much overlap do we have? And really, it's going to be defining that and feeling confident that the team that we're going to acquire will seamlessly come into our organization and really flourish under our leadership in the PE firms. You manage the entire sales process. What does the process look like?
So again, I think this is another area where we are differentiated from the industry in that we have it broken down into several different steps. We have our business development team getting the new clients in the door. And unlike a lot of the rest of the industry, we get a lot of our leads from Google search, from internet searches. Once they're in, getting the management meeting training together, getting them prepared, and getting the research team involved then to create all of the materials. Once the NDA is signed, we actually send out a video as well as the SIM, something that again sets us apart from the rest of the players here. And that marketing aspect, we have a marketing associate team whose job it is to go out and find potential buyers, again, going to a broad pool and bring in as many bids as we can. And that's where the closing team takes over from that bid negotiation, bid vetting point onto the LOI, onto the close.
So you've taken the initiative to departmentize the expertise in each one of the steps at this point, and dedicated team members internally, and it makes the flow very well. So in essence, you got a symphony inside your organization that's executing at a high level and able to do these transactions, be able to bring in the experts because you do have the volume of deals getting closed. So, and at the end of the day, it's about successful closes and
keeping the focus. I think what oftentimes will happen is in other firms, you have people who are working on deals trying to get them closed, but at the same time, they have an eye on where do I get the next deal? We having it separated, we allow our closers to really tune into what are the needs of the transaction. How can we get to close?
So you really explained that well, what sets you apart from other firms. I appreciate you sharing that. Do you see any trends in M&A industry at this point?
Definitely. I think, look, the bigger picture, especially for the lower middle market, we have a demographic wave that we're still at the start of. The baby boomer generation are still the majority of the owners of privately held companies. And I think we're still just seeing that swell at an early stage. So at the same time, we have private equity firms seeing capital inflows that have hit records. Last year was the record. And I think from what I've read across the big banks reports, 2023, it seems like there's still plenty of room for more funds to get allocated to private equity, to alternative investments in general. So I do feel like we are still at a really exciting point where transaction volumes are likely to continue to grow. More granularly, sort of towards the end of last year, beginning of this year, we did see all of the recession chatter finally start to have an impact, especially on new business. Getting entrepreneurs to come in and say, now's the right time to sell my business. It was a difficult conversation to have for a while there, but it's interesting. I was actually just in Atlanta for the Association for Corporate Growth meeting. And across the board, everyone I spoke to had the same problem. On the private equity side, supply. There just aren't enough quality companies out there. They have money, the funds are funded, and they have a need to deploy those funds. It's just finding the right targets. So to me, that's an indication that this is still a seller's market. And so we have actually now, coming into February, we saw a dramatic turnaround in new business. We've already gotten on 5 clients this month. So it's going in the right direction.
That's exciting. Yeah, we know the need is out there, and the banks are not going to be as benevolent, let's say, with lines of credit. So that's going to create some stress for those that are, may or may not be contemplating on selling, but it's going to be a challenge with cash flow on their end. And then the other side is the client slowing down on payments.
Yeah, and so far we haven't really seen any kind of broad takeaway across our client base. We don't have a specific industry focus, so we have a broad array of clients that we're representing. And across the board, it feels like the performance is still robust. So yeah, I think also on that point of funding and the bank financing, it's less of a problem for the lower middle market. You know, we do deals between, say, $5 and $35 million is kind of the sweet spot. You know, we represent clients who have $1 million of EBITDA and higher.
Okay.
And so when you go up to the larger deals, you know, $100 million plus, certainly that has a much bigger impact.
Yes.
For our slice of the market, we have seen, frankly, it's not that much of a difference. 4% interest rate is still serviceable. So, you know, mezz debt hasn't really changed very much. It was 12% 2 years ago. It's still 12%. So we're really not that impacted as much as you would think to rates.
When you look at the private equity community at this point, are they buying the companies outright? They're taking a 50%, 51% share. What are you seeing, in the portfolio in the last year?
The vast majority of our deals are full buyouts. There will be equity rolls, usually between 5 and 20%. We have seen larger equity rolls recently. That's true. Upwards of 35, 40% rolls. So it definitely seems like maybe there's a trend there, but there's probably just a couple of data points that I'm really speaking to there. So it's maybe too early to see a trend. We have seen sellers come in and say, you know what, I don't want to have bank financing. I'll take a larger seller's note.
Okay.
That's something we actually have seen maybe 2 or 3 times over now where the clients actually come out and requested it.
Interesting. And there's positive tax implications that you go back to your attorney and your accountants, and they'll help you with that. Why do that over time? Okay, we have capital gains, that needs to be part of the foresight. And then are we doing an asset sale or are we doing a stock sale? These are some of the foundational kind of questions that you and your team will help.
Yeah.
At Woodbridge, you focus on a lot of collaboration. Speak on that a bit.
Sure. Look, I think from every aspect of our firm internally, we have the different teams that are doing different things, but we work together to do them. And we make sure that if there's something that we've learned about the client or the way that they think, that's being communicated through the process, that our people are all aware of, what's going to put us in the best position to get a deal done.
How can our listeners contact you? Are there any links you'd like to share?
Sure. Yeah, look, I think for the private equity firms in the audience to look at our deal flow, I can definitely share with you our sell-side engagements page. So woodbridgegrp.com is the website. And if you go to the side panel, it's /current-engagements.
Okay.
Should be pretty straightforward to navigate to that once you get to the site.
I think it's important for the PE firms to take a look at their portfolio. I mean, I had a conversation, actually it was from the investment banker asking me to reach out to an individual that in PE, he's got 14 companies. You could see some challenges trying to manage that portfolio on their point. And it's, guys, why don't you peel off a few of the companies, raise some capital, meaning doing the exits on it. And then what does the team look like on the assessment side as they're going to leave certain pieces, individuals are going to leave with leadership to go with the company, or maybe it's strategic and they just want to have, some of the products that are being, they're in that company. So there's a multitude of ways to get deals done. Thank you so much for your time, Jacob. Your advice on mergers and acquisition is something anyone listening can benefit from. I want to thank you for sharing your vision. I want to thank our listeners. I look forward to being back with you shortly for another episode of the Private Equity Profits Podcast. This show has been produced by Market Domination, LLC.